Today is Monday, March 27th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financials this morning, Alan, looking at the stock market, the index futures have held up well during the recent banking industry problems. What does this tell us about the near-term price outlook for the indexes?
Well, for the indices to perform so well in spite of all of the banking headlines that we had as of late, that has to be viewed as a sign of strength, at least near-term strength. So the rule of thumb is basically anytime a market can hold up or even advance in the face of bearish news, that's a sign of strength, and I think that will apply this time. So I would look for some follow-through gains over the near term in the stock index futures.
And Alan, how do the banking industry concerns affect the Federal Reserve and the policy of the Federal Reserve?
Well, first of all, the banking uncertainties clearly shifted the Fed to a less hawkish policy. At the March 22nd meeting, the Fed hiked its Fed funds rate by 25 basis points rather than the 50 that was widely predicted 3 weeks prior. And now it looks like the Fed is on hold, with the central bank likely to keep its Fed funds rate unchanged at the May 3rd meeting. And now there's a chance that the Fed actually could lower its Fed funds rate by July or September. So clearly the news as of late in the banking sector has changed Fed policy from hawkish to possibly dovish later this year.
I would think so. Finally, Alan, which economic reports this week could have the most market-moving impact?
First of all, on Wednesday, we'll have the February pending home sales report guessed at a 1% increase. Thursday, fourth quarter GDP anticipated to be up 2.7%, with personal consumption expenditures up 1.4%. And then on Friday, we'll have personal income up 0.3%, the March Chicago Purchasing Managers Index at 43.9, and then the March Consumer Sentiment Index anticipated to be 63.4.
Thank you, Alan. Mark, turning toward the grain markets, we have a USDA stocks and acreage report this Friday. What's your expectations?
Yeah, a big report. On stocks, we're looking at core inventories at just over 7.5 billion bushels. That's slightly above the average trade guess, however, down roughly 250 million from a year ago. We've got a pretty good handle on the monthly usage, watching the exports and the ethanol production data. It's the feed usage, which is harder to measure. However, with lower cattle numbers and last year's drought, in the U.S. Southern Plains, feed usage for corn is likely going to be down well below year-ago levels all year. As a result, we're probably going to see a little bit more wheat found its way into U.S. feed rations. Our wheat stocks estimate is 910 million bushels. That's down about 20 million from the average trade guess and down 120 million from a year ago. In soybeans, our stocks estimate there is 1.695 billion bushels. That's in line with most average the trade estimates and down 237 million from a year ago. On the acreage side, we're a little bit more of a tilt towards corn than soybeans, with declining input costs, the spring revenue insurance guarantees, and just overall profitability. Our corn acreage forecast is at 91.5 million acres. That is up slightly from the February outlook estimate from USDA at 91 million, and that's up 3 million acres from a year ago. On beans, we're looking for 87.3 million, just a touch below a year ago and below the Feb outlook numbers. Our all wheat estimate, 49.1 million acres. That's down slightly from February. We see no major changes from the winter wheat acreage estimate from the USDA in January. Our spring wheat estimate is 10.45 million acres. That's down a couple 100,000 from last year.
Many great traders continue to watch the South American crop. What's the latest from South America, Mark?
Well, we finally saw some widespread rains across areas of central Argentina last week, likely too little too late to have a major impact on this year's production forecast. Friday's reports from the USDA do not feature South American updates. That will come on April 11th, a couple weeks from now. But USDA is still playing catch up with their production estimates. The USDA at 40 million metric tons, where most of the industry now are in the mid-30s on corn. Soybeans, USDA at 33 million metric tons, most are now in the mid-20s. So continue to look for lower production estimates there. We're rolling into the drier season now in Brazil. Farmers there have been able to nearly wrap up their second crop corn plantings at right now in the low to mid 90 percentile. Moisture is near perfect. We're going to need to see more rains for yield outlook to remain high. But overall, look for a little bit bigger production estimates there is our guess at this point. The major contributing factor right now in the marketplace has been, this huge South American crop. Its impact on basis levels, their ability to store the crop has become an issue, and that's led to a pretty good fund-related sell-off last week in the soy complex.
Lastly today, Mark, what's the latest with the commitment of traders report as it applies to the grain markets?
Yeah, we're finally caught up on the commitment of traders data from the CFTC. What really jumps out to me the most is what we're seeing in the index funds. We continue to see an inverse relationship between higher interest rates and lower holdings there in the ag space. The index funds, their holdings now in the ag markets are the lowest they've been since October of 2019. And I look for their positions here to probably bottom out when the interest rates peak sometime, hopefully this early spring, early summer or late spring. Money managers on the other side, they're also pretty good sellers in the ag space last week as well. That's the 5th consecutive week now. Their holdings in the ag space, that's the smallest they've been since August of 2020. So long a little bit in the soybeans and the soybean meal. However, now built a little bit of a short position in both the bean oil and corn, Kansas City wheat, and still rather sizable short position in the Chicago wheat market.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.